You're watching Traders Morning Setups with Dex the Algo Capitalist. Dex created his pulse wave price trigger reports over 2 decades ago, and he's been using them to ride the pulse waves as a full-time trader ever since. Find out more about Dex's reports and sign up for our next webinar to learn how to use them at pulsewavetrading.com.
Well. Happy New Year to everyone. Hopefully you had a wonderful holiday season for Christmas and New Year's. And it's good to be back and start off this new year, this new trading year of 2024. You'll be happy to know that Frank and I have been in the lab. So even though we haven't been putting out any content, it's because we've been in the lab. You have no idea what's coming for 2024. You have no idea what we have in store for you. Just total awesomeness. Can't speak on it just yet, but just know it's coming. So this is what we're going to do. This morning's pre-market program is going to have a little bit of a twist and an added bonus for you. Something I normally don't do, but because we have taken off for a couple of weeks, it's time to roll out the red carpet and show you what's about to happen. Not just in these markets, but in the world. That's right, man. Top flight security of the world, Craig. So get ready, because I hope you're sitting down, because we got some things to go over. But first, let's get this pre-market stuff out the way. Then we'll get the news out the way. And then the big surprise that I have for you today. First things first, in these overnight markets, we got the US dollar index down. It's at 102.35, holding on to that 102 handle. We got the euro up 11 pips at 109.88. Pound sterling is down 7 pips at 127.21, and the Aussie is down 29 pips at 66.99. Now, a note on these currencies: because the dollar dipped, it gave a temporary boost to the currencies for the going to the end of the year. And as you know, the Aussie was bucking the trend for a while, and then guess what? It turned down. So yeah, that's what's happening right now, as the dollar seems now to be starting to strengthen up again. It found support at that 101 level. Now it's looking like it wants to bounce, but we're gonna see what happens here. So that's putting pressure on your currencies at the moment. Now, Bitcoin futures right now me just a second. All right. Hopefully everyone will be able to hear me in just a second here. Having some connectivity issues. All right. You guys should be able to hear me now. So let's pick up where we left off at. Okay. All right. Here we go. All right. So we're on oil. Yeah. All right. So now the crude oil is down over $3.04 per barrel. So just to put this into perspective, all right, the market opened up at $73.74 a barrel, rallied to $73.95 per barrel, and has since dropped down to $70.69 per barrel. All right, so just incredible price action right now on the oil. Nat gas is down 16 cents to $2.73. And we have gold now. Gold is now falling apart. It's down $24.20 per ounce. We're at $2,025.50 per ounce on gold. Silver's down 10 cents at $23.21 per ounce. Copper right now is pretty much flat at $3.80. Dow futures down 152 points at 37,561. S&P holding on to a fraction of a gain, up 1.75 points at 47.36 3/4. E-mini NASDAQ 100 up 44 1/4 points at 16,504.50. And the Russell down 0.8 points, and it's trading at 1966 even. Soybeans down 9 cents per bushel at $12.47 per bushel. So we no longer have beans in the teens. We got corn down a penny at $4.59 a bushel. And wheat is down a whopping 13 cents per bushel, trading at $6.03 per bushel. All right, so things are trying to heat up here. With this marks the first full week of trading. Last week was an abbreviated week because of the New Year's holiday, and now that is behind us, and so now the markets are starting to chug along. The issue is now this is the official start of earnings season, and then on top of that, we have CPI data due out on Thursday. So very interesting week. We have potential for some amazing fireworks. Also, the Bitcoin ETF approval is expected this week, so that could cause Bitcoin to just explode. That's what people are thinking anyway. And as far as morning setups this morning, we really don't have any except for one. We have one, and that's in wheat. Wheat has a bearish 2-bar Charlie setup. So we're expecting all day down day in wheat and for the market to finish in the red. All right, so now that that's out the way, let's take a look at our market news for the day. We have 9 tech stocks to get in on ahead of a big year for the sector. You don't want to miss that. And Vive wanted to fix the housing crisis, but production delays and financial woes got in its way. And Boeing calls an all-hands employee meeting after the Alaska Airlines incident. Yeah, and did you know that DINK is becoming a thing? DINK is dual income, no kids. Yeah, people are deciding to not have children because of the economy. So the new adults, the young adults, the new class of adults, they don't want to have children. They don't mind getting married. They just don't want to have any children because of the cost of raising children is astronomical. I can understand. Now, as far as our Monday headlines, here we go. We got FAA orders grounding of some Boeing 737 planes after an Alaska Airlines flight lost part of its fuselage in the air. Ukraine just got a new Western air defense system meant to wipe out Russian drones by firing 1,000 rounds per minute. Joe Coy was the wrong host for the Golden Globes, and his jokes about Taylor Swift and Barbie prove it. Elon Musk may have been under the influence during an interview after his infamous tweet about taking Tesla private, according to the Wall Street Journal. And Donald Trump shared a bizarre video declaring that God made him to lead the country. And in market news, we got tech stocks to get in on ahead of the year of AI. Wedbush Securities highlighted 9 stocks, including Palo Alto Networks and CrowdStrike, to set a boost from a tech rally in 2024. Overall, Wedbush Securities' Dan Ives sees the tech sector finishing the year up 25%. A market vet believes the Fed could still hike interest rates. Gregory Branch, founder of Veritas Financial Group, said the market's anticipation of a rate cut has led inflation to reemerge. As a result, another rate hike could be in the cards. Investors came up short when it came to shorting last year. Short sellers suffered a $195 billion in paper loss in 2023 as stocks soared. And these are the 10 biggest short bets that went belly up for investors against companies like Tesla and Nvidia. In tech news, production delays and financial woes demolished a plan to solve the housing crisis. An innovative idea to build homes on an assembly line shot ViiV to unicorn status. But employees told Business Insider how internal problems plagued the company ahead of its downfall. The top 7 people in artificial intelligence defense. Developments in AI defense techs are moving quickly as global tensions escalate. The top leaders in this space include someone studying automation in military systems and another person developing microwaves to knock out drone swarms. EVs aren't holding their value like other cars. A recent study found that EVs had higher depreciation rates across all major vehicle types. Of the cars tested, the Tesla Model 3 held its value better than any other EV, followed by the Tesla Model X and Nissan Leaf. And in business news, a rule of thumb about making money: there are 2 basic ways to make money: to get paid to do things or own things. Most people make their money getting paid, but those who make fortunes generally do it by owning things. Boeing calls an all-hands meeting to discuss safety. Boeing CEO David Calhoun is calling for a company-wide meeting, per reports, to address Friday's Alaska Airlines incident, where a piece of the fuselage of a Boeing 737-9 MAX blew out. You know, I don't know what it's going to take. Boeing has been having all these problems going back years now, and they keep having problems. This is what happens when you cut corners, all right? When you cut corners, and there are multiple ways that companies cut corners. The number one way that companies cut corners is by choosing to not fix something. Instead, they patch it up. They figure it's cheaper just to patch something up rather than to go in and fix it altogether. And, you know, an airline mechanic can only do but so much. You got to give him the tools, number one, to work with, and he doesn't get to say what, you know, what it is. The board gets to decide what's what. So a airline mechanic can say this is not safe to fly, and the board will say we're flying it anyway. Just do this and thus and so, and we'll be all right. So you need to understand that going in. At the end of the day, the dudes that wear the suits are to blame for any incidents that happen with their aircraft. All right. You have safety inspections These airplanes are constantly supposed to be inspected before they even are pushed back from the terminal onto the tarmac, all right, and onto the runway. As they taxi to the runway, before any of that happens, they're supposed to, be addressed in the hangar where they are supposed to make sure everything is good. And they normally don't. They cut corners, all right? They use cheap material. They see problems, and instead of, fixing it, they figure it's going to cost too much. So they say, we'll just run it anyway. If any problems come up, we'll deal with it then. It's not just the airlines, it's company wide. This is corporations, period. Shrinkflation is still out of control. All right. You're getting less of a product and you're being charged more for it. All right. Or at least you're being charged the same price for less. Okay. So packages are shrinking, ounces or less. And that's just across the board in all things. The job market wrapped up 2023 with a surprisingly hot December. The economy added 216,000 jobs in December, way more than the forecast of 170,000. Meanwhile, the unemployment rate was at 3.7%, which is just below the expected 3.8%. A word on the unemployment rate. The unemployment rate is a farce. The way they calculate it is a farce. Everything about it is a farce. They always say one number and then they come back and revise it later. You cannot trust the government reports anymore. The numbers are massaged and tweaked to get the kind of result that they want. In other words, the Pentagon's second in command didn't know Defense Secretary Lloyd Austin was hospitalized when she took over his duties. The Red Sea attacks are throwing supply chains into chaos, but U.S. oil exports appear to be benefiting from them. Google just lost another executive working on augmented reality as it plans to woo a partner for its glasses project. Sports betting is the cost of hanging out with friends for many men on college campuses, and researchers warn it could be creating dangerous habits. The S&P 500 could crash by 30%. A recession is likely underway, and interest rates might not fall before summer. What's happening today? Well, National Young Arts Week kicks off today. The annual celebration showcases visual, literary, design, and performing arts from 15 to 18-year-olds. CES activities continue ahead of the official start date. Media Day and digital Hollywood events will take place in Las Vegas. And happy birthday, Valkyrie. Elvis Presley, Kim Jong-un, Stephen Hawking, David Bowie, and Noah Cyrus were also born on this day. All right, now let's get into what you probably are wanting to know, and that's what's up with those 9 stocks you talked about in the beginning. Well, these 9 stocks, according to some, they think that they're going to take off in 2024. Let's see about that. Well, if you thought tech stocks did well last year, just wait until you see what 2024 has in store. The artificial intelligence race may have officially began in November of 2022 when OpenAI unveiled ChatGPT to the public, but it wasn't until March of 2023 when NVIDIA revealed just how high the demand for semiconductor chips powering AI programs really was, that investors realized they were witnessing the birth of a generational technological shift and invested accordingly. Now, the result was an incredible run for what became known as the Magnificent Seven, a group of tech stocks at the forefront of AI innovations, like Apple, Microsoft, Alphabet, Amazon, NVIDIA, Meta Platforms, and Tesla were collectively responsible for the vast majority of the S&P 500's gains last year. And the group is now worth more than Canada, Japan, and the UK stock markets combined. All those 7 stocks hogged the spotlight for the most of last year. The entire tech industry enjoyed a strong 2023. The communication services and information technology sectors rose over 50% last year. Dan Ives, a senior equity researcher analyst at Wedbush Securities, thinks more gains will come this year. With 2024 now here, the street and tech world await the year of AI to take shape and ultimately drive tech stocks higher, in our opinion, he wrote in January the 1st in a note to clients. Tech stocks will rise 25% in 2024. The key to Ives' bullish outlook is AI, of course. He said, in our opinion, the new tech bull market has now begun and tech stocks are set up for a strong 2024 led by big tech, software, and the overall chip sector as the AI spending tidal wave hits the shores of the broader tech sector. We believe now the rest of the tech sector joins the Magnificent Seven party in this rally into 2024 with AI tailwinds abound. The biggest tailwinds are spending across the tech sector on AI upgrades at every level of business. In his conversation with management teams across the industry, I've found that the common theme was leadership's focus on utilizing AI in a variety of ways. 50+% of all enterprises we have recently surveyed see 20+ use cases for generative AI, and 80% plus of all enterprises see 10+ use cases, including data analysis, marketing content creation, document editing and summarization, and many more to improve business operations, increase efficiencies, and create a more cost-effective capital structure, with the benefits of using generative AI becoming increasingly clear. Now, Microsoft and Alphabet are the primary beneficiaries of this spending spree. I've noted that Microsoft in particular is the true leader in the field, thanks to new developments in its cloud computing platform Azure, like its AI companion Copilot. But the two tech titans won't be the only winners of higher AI spending in the year ahead. A key theme from our recent December quarter end checks in the field have been that AI monetization has begun to positively impact the tech sector, with NVIDIA, Microsoft, Google, Datadog, and Planeter as showing that AI use cases are multiplying across the enterprise and consumer landscape. And as these AI tailwinds spread across the sector, all of tech will benefit. So much so that Ives believes the NASDAQ could hit a new all-time high before year end. While we can see ebbs and flows in the coming months, given Fed jawboning, macro factors, we believe tech stocks will be up 25% in 2024, with the NASDAQ 20,000 level or bull case scenario, as the street is still significantly underestimating how quickly this AI monetization cycle is playing out among enterprises in the field. Now, to be clear, the NASDAQ this morning is at 16,000. So that's a 4,000 point run that Ives is predicting will take place from current price levels. Now, there are a number of ways to catch these tailwinds for yourself and make a profit. For those who want to keep it simple, tech-centric ETFs like the SPDR New York Stock Exchange Technology ETF, ticker XNTK, or the Invesco S&P 500 Equal Weight Tech ETF, SRPT, or the Vanguard Information Technology ETF, VGT. These are all viable options. But Ives has more specific investment recommendations. His favorite tech stocks to buy in 2024 are Apple, Microsoft, Google, Palo Alto Networks, Planeter, Zscaler, CyberArk, CrowdStrike, and MongoDB. All 9 are rated outperformed by Wedbush Securities, and all of them stand to benefit from a tech sector rally this year driven by AI. So that is the prediction. That's what some analysts on Wall Street are seeing and thinking will pave the way. However, since we're on the subject of AI, not so fast. Not so fast. All right. It all sounds nice, right? Oh, you can make $1 zillion if you just buy these tech stocks, right? But what is going to happen to our society as AI and robots take most of the jobs? Did you know that already there is an automated McDonald's in Texas where you have robots doing everything? No cashiers. You walk into the lobby, there's terminals there, robotics to greet you and say hello. You use the kiosk, order your food, and then at the drive-through, there's a conveyor belt. Your food comes right down to you. Yeah. They even have those who have shopped at Walmart, you know what I'm talking about. You know that big buffer machine that goes by itself? It's sort of like a ginormous version of the little robo vacuum. Remember the little disc vacuum that came out a few decades ago? Well, Walmart has this really big giant buffer machine that drives itself and does whatever it wants to do. And you also see it in Sam's Club. Okay. And this thing is not manned. All right. It knows how to go up and through the aisles, buffering and all that, and whatever it does, and it won't bump into people. It stops, it beeps, it does all this stuff. Well, they have a similar type of a thing at McDonald's. It's like a robotic tray on wheels, and it brings people's food out to them. It's crazy what they're doing, but this is already being piloted in Texas as we speak. This already exists. All right. So if you haven't lost your job yet, you should be very thankful. Artificial intelligence and robots are taking more jobs with each passing day, and there will be no end to this high tech invasion. Eventually, we could get to a point where AI and robots can do virtually everything far more efficiently and far more inexpensively than humans can. So, what will happen to the vast majority of the human population when their labor is no longer needed? Will a way be found to quietly deal with useless eaters that are considered to be just taking up space? For years, we have been warned that AI and robots would revolutionize the workforce. And now that that day has officially arrived, well, for example, Amazon has been using various types of simple robots to perform certain tasks for years. And now highly sophisticated humanoid robots are being deployed right alongside normal human workers. You heard me right. Amazon recently began testing a new robot in its warehouse operations. Meet Digit, a humanoid bipedal robot with a turquoise torso and smiley eyes. Designed by Agility Robotics, which Amazon has invested in as part of its Industrial Innovation Fund, Digit is only the latest of a string of warehouse robots the company has introduced over the last several years. However, most of the other warehouse robots have been cart shaped or robotic arms, not humanoid like Digit. Digit costs about $10 to $12 an hour to operate right now, based on its price and lifespan. But the company predicts that costs to drop to $2 to $3 an hour, plus overhead software costs as production ramps up. Agility Robotics CEO Damian Shelton told Bloomberg, How in the world are you supposed to compete with that? How? No human worker is going to work for $2 to $3 an hour. This is not 1986, where the minimum wage was $3.35 an hour. Okay, this is not 1986. It's not. It's just not. Plus, robots don't need breaks. They don't get sick. They don't complain, and they don't steal from the company. So there is no pilferage when it comes to robots. So this trend is only going to accelerate during the years ahead. Even now, like I said, you have this McDonald's restaurant where almost entirely is being run by robots. All right. You may be thinking that robots won't be taking your job anytime soon because you have a white collar job that requires a high level of intelligence. Well, if you are a white collar worker, there's a good chance that your current job will one day be made obsolete by artificial intelligence. You've heard me say this before on this channel. In fact, Goldman Sachs is projecting that AI could take as many as 300 million full-time jobs during the years ahead, and most of them will be, wait for it, white-collar jobs. I warned you about this. I've been warning you about this. You think because you white collar, oh, it's not going to touch me. I'm a doctor. I'm a lawyer. I'm an engineer. Oh, yeah. They already have robotics that can perform surgery. They already have the technology out for AI lawyers and AI judges. Yeah, you didn't know that? Well, now you do. Okay. 300 million full-time jobs go poof. And these are mostly white-collar jobs. One more time. As many as 300 million. Not 300,000, not 300, 300 million full-time jobs around the world. Not just in the U.S., around the world. Top flight security of the world, Craig, of the world. Could be automated in some way by the newest wave of artificial intelligence that has spawned platforms like ChatGPT, according to Goldman Sachs economists. Now, they predicted in a report that 18% of work globally could be computerized, with the effects felt more deeply in advanced economies than emerging markets. US of A. That's partly because white collar workers are seen to be more at risk than manual laborers. Administrative workers and lawyers are expected to be the most affected. The economists pointed that part out. Now, compared to the little effect seen on physically demanding or outdoor occupations, such as construction and repair work. So, how are you going to make a living when AI and robots do almost everything better and cheaper than you can? Vast numbers of jobs will be lost during the years ahead. Sadly, the truth is the U.S. economy is already bleeding jobs. That's right. According to the BLS, they said that the established survey indicated that the U.S. economy added 216,000 jobs last month, but historically the household survey has been much more accurate, and it showed that the U.S. economy actually lost 683,000 jobs last month. You heard me right. But that's just the start. Next, we turn to the numbers behind the headline job prints, which were rather terrible. The monthly non-farm payrolls from the established survey may have been weak at 216,000, but The far more accurate household survey showed that the number of employed workers actually collapsed by an unprecedented 683,000, the biggest drop since the U.S. economy was shut down by COVID. Yeah, think about this. The BLS report also showed that the number of full-time jobs in the U.S. dropped by 1.531 million during the month of December. See, they're keeping this out of the mainstream media. They don't want you to know this. All right. One look at this month's adjustment, and it's literally a shocker. You will not hear anyone from the Biden administration, the mainstream media, or associated economist cheerleaders mention this. But the BLS report that in December, the number of full-time jobs plunged by 1.531 million to 133.2 million, the biggest monthly drop since the record COVID crash of 14.7 million jobs. If that number is even close to accurate, the United States and the world, for that matter, are in really, really big trouble. Just let this marinate for a moment. We're talking about a tsunami of layoffs that have been happening in corporate America. And at this point, things have gotten so bad that even BlackRock is getting ready to lay off workers. That's right. You heard me. BlackRock is going to lay off workers. That's analogous to Warren Buffett starting to sell his jets and his yachts and his mansion, talking about, I can't afford this anymore. Yeah. BlackRock, the world's largest money management firm, plans to announce layoffs in the coming days of about 3% of its global workforce, according to Fox Business. The job cuts of around 600 employees, which have yet to be reported, are being described internally as routine, according to a source familiar. Meanwhile, bankruptcies are surging all over the country. In fact, the number of bankruptcy filings in the United States in 2023 was 18% higher than it was in 2022. U.S. bankruptcy filings surged 18% in 2023 on the back of higher interest rates, tougher lending standards, and the continued runoff of pandemic-era backstops. Data published showed that although insolvency cases volumes remain well below the level seen before the outbreak of COVID-19. Now, total bankruptcy filings encompassing commercial and personal insolvencies rose to 445,186 last year from 378,390 in 2022, according to data from bankruptcy data provider Epic Acer. Now, Joe Biden will deny it for as long as he possibly can, but the truth is that we are in an economic crisis right now. But what we're experiencing at this moment is not even worth comparing to what is coming. So enjoy the last fumes of prosperity while you still can, because this ride only goes downhill from here, ladies and gentlemen. And now, the moment you've been waiting for, the one I promised you, the big surprise. Here it goes. Drum roll, please. That's right, folks. Some chart analysis. Let's get it. So this here is the Bitcoin futures. And as you can see, the market, yes, visually is in a bull market, right? And you see we had this big sell-off here, and it generated a crash alert, of which now the market is just moving sideways, okay? Technically speaking, it is showing signs of exhaustion at the 45,000 level. Now, mainly all of this here is because of the announcement of the Bitcoin ETF this week. Final approvals so that the market can do what it's going to do and take off. As you can see back here, the market was actually showing signs of weakness and plummeting. All right. So this is all excitement based on the news that's coming out. Keep in mind that all things being considered, if this trend were to continue uninterrupted, meaning that they do officially make it official that the Bitcoin ETFs are going to be allowed to go, and then of course, every fund in the world is going to want to come out with a Bitcoin ETF. Well, guess what? All things being equal, are you ready for this? This is a plus, but it's also a minus. All right, here we go. All things being equal, this will only net you anywhere between 70 to 80,000 Bitcoin by the end of the year. All right, all things being equal, our top side target is going to be between 70 to 80,000 for Bitcoin by the end of 2024. If the Bitcoin ETF approvals are finalized. All right. So this is contingent upon the SEC. All right. So Bitcoin 70 to around 70-ish, maybe even 80,000 is your top side target for the end of 2024 for Bitcoin. Let's move on. All right. I've been asked to keep this one in the rotation, so we'll do so. This is ZEC or Zcash. All right. Unfortunately, this market is still in a bear market. All right. So the outcome for this week, for this year in this market is for this one to remain flat. All right. Flat to bearish. All things being equal, we expect the market to stay within the range that it's in right now. And it'll probably get down as far as on the low end. We have it getting to between $12 and $9 by the end of the year. All right. I know that's not what you want to hear, but according to the projections and how this market has moved in 2023, which was sideways with a bearish bias, we don't see that changing anytime soon. All right. We see it hitting new 52-week lows. It's in a locked-in bear market, and I don't think that's going to change this year. As far as XRP Ripple, slightly different. This one is a flat to with a bullish bias. So by year end on this one, we would anticipate that this one could hit a range between $3.50 and $5.50. That's right, $3.50 to $5.50 per ounce. I'm not per ounce, but you know what I mean, per coin. So we'll have to wait and see what happens on that. It's hard to say right now. All right, next we have, let's see here, silver. All right, so here is our silver. And as you can see, this market had a nice little bear market rally, right, after it got down to the $20 handle. Then we ran all the way up here to the 26 handle. Okay, so you had a $6 run, which was nice. And the market ended, in a bull market still. Even though it was in a bull market correction, still a bull market nevertheless, right? So what are the projections for silver, all things being equal? Well, if it continues on the current trajectory right now, the market has said we've put in another support bottom, right, of which to rally from, because this market has been in a liquidation phase, you can see, with the bearish trend momentum reading. But that bearish trend momentum reading has now dropped off, and we have the beginnings of a bullish trend momentum reading with the rally alert from starting from Sunday night into today. So this one for the next 3 to 5 days is on rally alert watch. We're anticipating that the silver will try to rally again from here. So where do we see the overall projections coming from silver? Well, to be quite honest, all things being equal, we should see, and it's still at a crossroads, it's either or. So I'm going to give you both projections. There's a bullish scenario case and a bearish scenario case, and both can be quite devastating. All right, so on the bullish scenario case, we have a projection between $45 to $52 an ounce by the end of 2024. Somewhere between $45 and $52 per ounce for silver is our end of year projection. All right, that's the bullish scenario. However, if the market fails here and continues to break down, well, the downside projection there is around $4 an ounce by the end of the year. Right now, the evidence would suggest the bullish perspective, not the bearish perspective. But if the bearish perspective plays out, if you want to know where silver will bottom out, it should be around the $4 mark by the end of 2024. Right now, it looks like the bull perspective is going to play out, and we should see between $45 and $52 per ounce by the end of 2024. All right. So that is our projection for silver. Next, we have the Dow. So as you see here, the Dow was consolidated for a majority of the time. Last year really just had a problem getting up. You didn't really start seeing the market break until November. And then all this here, you can say was Santa Claus rally or whatever you want to make of it. But that's pretty much what that was. All right. You can make an argument that the market has not yet exhausted itself topside. All things being considered, where does this put the Dow by the end of the year? Well, if all things being equal and the rally persists like it is right now, we have a staggering projection for the Dow. And that staggering projection would put the Dow at about between 47 and 50,000 by the end of the year. That means that you could see the Dow rally another 10,000 points from here. All things being equal, the bullish perspective, topside projection is about 45,000 plus. The downside perspective, all right, where might the market go for the downside perspective? Well, this is going to sound weird to you, but there really isn't necessarily a bearish downside perspective case because the bias is extremely bullish right now. But if a bearish scenario were to play out, all things being considered, based on today's projections, all right, just today, are you ready for this? That would put the Dow by the end of the year somewhere in the 20s, in the neighborhood of about 20,000. I know, ouch. Hey, I'm just a messenger. Bearish case for the Dow is back down in the 20,000 range. Bullish case, like I said, about 47,000 ish. All right, could be a little bit higher, but yeah, about 47,000 by the end of the year for your Dow. All right, next up we have the NASDAQ 100. The NASDAQ 100 has been on fire, and right now the bullish perspective for this one, believe it or not, is not all that much higher because it's still in the configuration of a bull market, and it's a rather strong bull market where it can actually survive a decent pullback, even down here to the bottom of the Kumo cloud. It can really survive that because of the strength in the market. So technically speaking, the upside potential for the NASDAQ is open-ended, literally open-ended. There's no way to know what the high will be because it can just go. It has infinite upside potential based on last year's performance. Okay. Bearish perspective. All right. So the bear market perspective, based on what we see here, end of the year would put the Dow Jones back down below 11,000. That's the bearish scenario by the end of the year. If the market tops out, the market will close below 11,000. All right. So that's your prediction here for the NASDAQ 100. All right. For gold, gold is a little bit different than the silver because the gold has been stronger than silver. It's had more of a bullish bias to it. And because of its current configuration, it is also open-ended topside. So the bullish argument is actually open-ended for gold. All right. There is no cap. We don't know where it's going to stop. It has the potential to climb significantly from here. It's quite awesome where the price could end up. It's still showing that it's in a very mature, very powerful bull market. Every break has been nothing but bid right back up again. So this is like the NASDAQ 100. Technically speaking, gold is actually showing that it's stronger than the NASDAQ 100 because it survived awesome correction and pullback only to come right back up to new highs again. That's a market that just won't stop. So the upside potential for gold is literally off the charts. But the downside perspective for gold, okay. The downside perspective would be to drop back below 1,600, which means that if this market tops out anytime soon, that it will close below $1,600 an ounce by the end of the year. Okay. So that's your downside target. So now you have the bear market perspective and the bull market perspective for gold. All right. Next up is the S&P 500. S&P 500, like the NASDAQ, has been, pretty extraordinary as well. Based on current configurations, the top side here is unlimited. We have no idea where this thing could actually end up by the end of the year if the bull market pattern persists. You could be looking at a runaway market. It could run thousands of points from here. There's no limitation. You see the correction back here, even in a neutralized market with a bearish downside. What did the market do? It broke out to new highs. So the NASDAQ 100, gold, and the S&P 500 have shown stark resiliency, which means their upside potential is unlimited. But the downside, the bear market perspective, if the S&P 500 were to top out here, then we would see a close below 3,600 by the end of 2024. All right, a close below 3,600 for the S&P 500 by year end if the market tops out here. All right, next up. All right, so what might we have on crude oil? All right, as you know, so far, we've been giving you both the bull market hypothesis and the bear market scenarios for these securities. So we'll do the same here for oil. Oil has been, for the most part, flat, consolidated. Yeah, you had this incredible rally here, but look what happened. It gave every last penny of it back and pulled back to two old supports. Okay, so what is the perspective here? All right. Bull case scenario and the bear case scenario. If this market were to wake itself up and try to do something positive in its life. What we're looking at on the bull perspective, all right, you're looking at the possibility of maybe $115 to $120 oil by year end. Somewhere between 115 and 130 maybe. So we'll just say 115 to 130 by the end of the year, okay, a settlement for your crude oil. The bearish perspective, however, you want to know what that one is? Well, here it is. The bearish perspective for end of year would be around $30 a barrel. For the market to be somewhere in the ballpark of about $30 a barrel. That is the bear perspective. And as you can see, the market is already in a bear market. It's official, okay? And it's been having a real hard time getting any technical bounces. All right, it's having a hard time getting any technical bounces. You know, really hard time, folks. Every time you get, like, the market wants to give you a nice little bear market rally, it cannot find a bottom. All right. Once this support right here breaks, it's a wrap. This thing is going to be in free fall and go below 65. So it looks like the bear case is on the table more than the bull case. And I know you're thinking about the war and all that other stuff. Well, the war has been raging on for quite some time, and look at the price. Price action tells you everything you need to know. Next up, what do we got? All right, the euro. So as you know, when you talk about currencies, everything is pegged against the dollar. So if the dollar's strong, that means all the other pairs will be weak, and vice versa. All right, so with the current euro, as you can see, it's in a bull market, but you know, it has these little runs, and then it corrects, runs, corrects, runs, and it keeps on trying to buck, but it's not really doing anything because the old highs have not been breached. Until you put in a new 52-week high, we have to say that this one has the potential for a failed, a double top. All right, that's what we got to call it. You got to call it like that for now. If we get consecutive closes above the 52-week high, put in a new 52-week high and get consecutive closes, then at that point we can make an argument that the end of the year for the euro should close above 124. So the bullish argument will be 124 for the euro. However, the bearish argument is a little bit more staggering because it puts the euro, I hope you're ready for this, back to its inception. I said that right. Back to its inception. What does that mean? Well, when we went from the Deutschmark to the euro premiered at 88 cents. Okay, it premiered at 88. It's a $1.09 right now, but it appeared at 88. That's where it started at, 88 cents. All things being equal, if this market tops out and we do have a double top here, then the potential to slide back to its inception of 88 cents is quite possible. All right, so there you have both the bull and the bear case for the euro. Next up is the pound sterling. So the pound sterling, like the euro, is quite similar in that we're calling for the potential of a double top, all right, or failed top here. If it cannot get a new 52-week high and get consecutive closes above the prior 52-week high, then the bearish case for the pound actually would be to drop somewhere between right below par, like around 99 or 98. So between 105 and, like, I'll just say 98. So the pound has the potential to close by the end of the year between 105 and 98. So it has the potential to drop below par. Not as bad as the euro currency itself, but still that's quite bad when you're at $1.26. Falling to 98 is staggering. So there's your bearish case there. On the bull side, what could happen? Well, on the bull side, this market has the potential to get as high as 150 plus. Yeah, I know. All right. 150 plus. But if that were to happen, that means something horrific is happening on the other side. We'll get to that. All right, on the Aussie. So the Aussie here it struggled. It got up near resistance and kind of gave out here. All right, so this bear market rally could be over and the market could be ready to start to come back down here. So we'll be watching that closely. But you are still in a bear market. Okay. So this one's been sideways for the most part. You can see we ended here, we started back here, and you really haven't gone anywhere. So all things being equal, what does this market have the potential to do? It has the potential to hit about, we should close above 76. All right, by the end of the year, if this market turns bullish and bottoms here, it should close above 76 by year end. If the bear market case persists, then we're talking staggering downside, where this thing could get down to 50, get down into the 50s. Easy, like near 50, maybe even 49 or 48 cents. I know. It's hard to hear, but those are the projections. Russell. So the Russell had a ridiculous bear market rally off these 52-week lows, as you can see here. What do we have to say here? Well, this market has topped out, all right, and it's been falling ever since. It is in a free fall status above the Kumo cloud. Nevertheless, what is the potential? Well, looking at this one based on what the market has done, you are looking for the possibility for this market to drop to close around 1,300 by the end of the year, somewhere about 1,300. So the bear market scenario is a close below 1,300 for the Russell by year end. On the bull side, should the market power back up again, well, let's just say the market should close easily above 2,500 by the end of the year. So we have a 2,500 upside target on the Russell for the market to close above 2,500 on the bull case scenario. The bear case scenario I already gave you, and that one is not so pretty. It's a close below 1,300. All right, next up we have the big one, the US dollar index. All right. This one I need to give some explanation and background. All right, so depending on who is in the White House, there tends to be this ebb and flow with the dollar. There are layers to the dollar, okay? So a strong dollar policy likes to see the US dollar, above 90 cents, right? We're at 102 today, okay? That's a strong dollar policy. 90 is the floor. Got to stay above 90 cents. On a weak dollar policy, that could usually send prices to around, I want to say 88. All right, believe it or not. Anything 88 and below is a weak dollar policy coming out of the White House, okay? You have these levels. So 88, and we'll just call it 78, is the 10-cent range of warnings and catastrophe for the dollar. As soon as the US dollar drops to 88, the alarm bells go off because now you're in a state of potential collapse. Once the dollar breaches that and comes down and hits 78, that's a red alert. We are in trouble. The economy is imploding. Something needs to happen. All right. They cannot afford for the dollar to break below 78, regardless of what the policy is in the White House, regardless of the outlook of the Fed. The dollar cannot drop below 78 ever at any time. It has dropped below it, and it always like it comes back like immediately. It doesn't stay there. I think the lowest it got was like 77 or 76, and they won't let it stay there. They'll do whatever they got to do to pump that up. Okay. But the alarm bells go off not if it drops below par. People think that par is the big standard, not for the dollar. For the other currencies, it is, but not necessarily for the dollar. All right, par is par. But as you can see, the market is doing what it can to stay above par because your support's down here at 99.55. All right, they gotta keep this market above par in order to keep face that the US dollar is still the world reserve currency, regardless of what you hear in the mainstream media, regardless of what you hear in the news, regardless of CBDCs and all that, regardless of all that. It doesn't matter. Okay. In order to save face that the US is the world superpower and that the dollar is the world reserve currency, notwithstanding, it needs to stay above par. A few things will start to trigger events and happen if the dollar cannot stay above par. If it drops below, let's say the support right here does not hold, we are below par, not on a spike intraday level, but on a closing basis. It sends a message to the rest of the world, especially the BRICS, because things are heating up with BRICS. It's sending a message that the US dollar is on its way out as being the world reserve currency, and that something else is now going to take its place. It also sends a signal to the BRICS that not only is the US dollar losing that status, but the country as a whole, as a superpower, is weakening. It also will start a domino effect within the US economy in other areas because the dollar is losing its buying power, losing its strength. It's weak. All right, we're not talking about import exports. Obviously, a weak currency for exports is will help drum up business, but a strong dollar makes it harder. We already know all that. I'm not talking about global macroeconomics and globalism. We're talking about the effect on the U.S. people, the effect of the citizens of the United States of America. The dollar dropping below par is bad news for you, American. Okay? They got to keep it above that or they lose face. And when that happens, it can set aside a domino effect in other areas, especially when it comes to military and when it comes to war. It means that okay, the the shark doesn't have any teeth. All right. The surfer is not afraid of a toothless shark, right? Because it can't hurt you. Well, that's what the US will appear to become to the world. You can't keep your dollar strong. It just dropped below par. You're not the superpower that you once were. We will do whatever we want to do. Now the BRICS can take things to the next logical conclusion, the next level. Then you get to a point where countries are no longer afraid of you in any capacity. They're like, forget your nukes, forget your military prowess, forget your navy, forget your air force and your marines and your army, forget all of that. We ain't scared of you because you don't have any money. You're broke. You're bankrupt as a country. That's the signs and the signals that a dollar dropping below par will send. It used to be decades ago that it didn't matter whatever happened to the price of the dollar. Things were what they were. But in light of current global political realizations, the dollar cannot sustain dropping below par. It will spell disaster for the U.S. as a global world superpower. It will no longer be able to say those things. And it will be teeter-tottering on destruction at that point. For the first time in U.S. history, a dollar dropping below par will spell immediate disaster. All right? Economic death. And other things will come as a consequence. That's why they're keeping this thing bouncing and from going below par. You're hearing it here first today. Mark this video. Download this video. Do what you have to do so that you have this information as we go through the year. All right? You're going to need it. A lot of information I gave in this video today. I'm letting you know what it is. Regardless of what the talking heads say or don't say on TV, I'm giving you what it is. All right? So that you know what to look out for. If the dollar drops below par, then it will cause the bullish scenario to kick in for the other currencies. And you know how I've been giving you both bullish and bearish scenarios. That is what will happen. Okay? So a weak dollar means strong commodity prices. And because gold and silver act as, a safety against hyperinflation, and they act as a commodity, but they also act as a currency at times. Well, that will bolster the bullish scenario for both gold and silver. It also help commodities like soybeans, corn, and wheat to be able to have bullish exposure and rally as well. Across the board, commodities will rally across the board. So understand that, okay? All right, moving on. All right, Ethereum. All right, so here's your Ethereum situation. So right now it's in a bear market, but just like the Bitcoin chart I showed you, it's identical. It's identical, okay? They're moving together right now. So all things being equal, the Ethereum should be able to close above 3,000 by year end. All right, we should have a firm close above 3,000 for Ethereum, all things being equal, if the bull market is allowed to continue. If the market tops out here, and this proves to be the end of the road, then you're looking at a close by year end below 1,000. All right, Ethereum should close below 1,000 by year end if the bearish scenario kicks in. All right, bullish scenario will close above 3,000. Bearish scenario will close below 1,000. All right. All right, there you have it. I hope you enjoyed the little surprise here at the end with the chart segment and me giving you my year-end projections for a vast number of these markets. And there is much, much more exciting things to come for you that we have in store, and you're not going to want to miss it. All right, so remember, the system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And on that note, smash that like button, and let's all have a happy new year. Peace.